Hi, it's Michael Farr from Farr, Miller and Washington. Markets have been very interesting, albeit somewhat unkind, for the month of April here. The S&P 500 down so far this month after an awfully good fourth quarter 2011 and a pretty good first quarter 2012. The last week, or this current week of April the 22nd, has seen a little bit stronger. The first 3 days of this week have seen up days, up about 8.9%. The overall month is still down, but we're seeing some positive improvement. People are concerned about the notion of sell in May and go away. The last 2 years, 2010 and 2011, this proved to be a very good strategy if you had sold stocks in May and bought them back in September. This sort of market timing is nothing to which we subscribe here at Farr, Miller in Washington, but we certainly have to give a tip of the cap to say that it has in fact worked. Summers have been bad the past couple of years, and as we look across the summer and warmer months, hard to believe that they might be a lot warmer than the couple of months we've just had, but as we look across these warmer months, it's hard to think that stock prices will continue to be a lot warmer given the challenges of the fall. A couple of things that I'm looking at here this week, and I'm going to be watching very closely going forward. French have an election coming up, the second round of presidential elections on May the 6th. French voters return to the polls, and they are, it seems that they're going to elect François Hollande. My mother's a French teacher. I'm sure she won't approve of that. He is a representative and will be a president from the French Socialist Party. We are seeing in France sort of a gravitation towards less austerity. Nobody wants to tighten down the economy too much now. We've seen the government in Holland collapse, really, the Dutch government collapse, due to budget disagreements again. Again, the voters don't want too much austerity. Well, this creates a bit of a problem because Germany, the strongest player in the EU right now, who is still calling the tune, has relied on this sort of collegial group to say, yes, we're going to be behind you, we're going to take the right steps to do the right things. To the extent that they have all been sort of singing from the same song sheet, markets have found strength and sustenance and have recovered in timely ways. You know that we've been watching this very closely. As you know, the news from Greece would come in and markets would go down, and it sounded like the EU could get together and address the problem in a concerted way, collegial way, and markets seem to recover. If they lose the collegiality in Europe, particularly in terms of their agreement to address these deficits and come to some sort of accord, I think that we could have some more problems and shock from Europe and those European economies. Today, the Federal Reserve announced the results from their most recent meeting. Mr. Bernanke was on TV. They left rates unchanged, but they started a little more cautionary language about the extent of the rate cut, meaning they think that end of 2014 is still okay, but they're starting to act a little more hawkish. They're starting to be concerned about the levels of growth. There was no discussion anywhere of any additional Operation Twist or quantitative easing, which has been the system that the central bank has used to force money out into the economy. Whether you think it's worked or not doesn't really matter. Markets have traded on it and depended on it for quite a while. So I'm very interested today to see that the market is stronger, even though the Fed has perhaps issued some of their first cautionary words about not supporting the markets, about not having a long extended period of zero interest rates. So Bernanke said, he did add this caveat, and I want to make sure I get it right. We remain prepared to do more as needed to make sure that this recovery continues and that inflation stays close to target. So he didn't entirely, while he said that the punch bowl might not be forthcoming, it hasn't disappeared entirely. We've got lots of things in motion, not to mention, of course, our own election in November. We have our debt ceiling coming up in the end of the year. Tax cuts are expiring. Lots of things could happen in this particular lame duck session. I'm going to go ahead and posit that this will be the most important lame duck session of Congress that we've seen in perhaps the last 50 years. So important things going on. We continue to stick to companies that have very solid balance sheets, strong cash flow, low levels of debt, really good management that are expanding market share and growing their bottom lines. We think this is going to protect us through whatever the market may bring, and whether even though we may not sell in May, we'll weather whatever happens. And indeed, having not sold last May, we're higher than we were last May. So we're still ahead on the major market indexes. I think we're doing okay. We have to stay the course. Lots of things in motion. Pay close attention and keep that sharp ear out for what happens next out of Europe. We'll get through just fine. If we can help you, please give us a call. For Farr, Miller in Washington, I'm Michael Farr.